Hello, and thank you for joining us for this World Council of Credit Unions virtual event, Climate Challenges and Opportunities for Credit Unions. My name is Greg Newman, Director of Communications for World Council. Climate change is an existential challenge facing the world today. Combating it will require cooperation on a global scale, and credit unions have a unique role as member-owned financial institutions. They prioritize community resilience and long-term sustainability, which means climate change also presents an opportunity for credit unions to innovate, serve member needs, and expand their relevance. Today's presentation will feature Kamir Mahadis, Professor of Economics and Policy at Cambridge University in the UK. He will speak about the challenges climate change presents to sovereign credit ratings around the world and the impact that has on markets. Grace Akinyi, Head of Programs and Business Development for the African Confederation of Cooperative Savings and Credit Unions, or ACOSCA, who will talk about the threat of climate change for credit unions in Africa and the challenges they have in implementing green solutions. And Alyssa Stetsishin, Communications Lead Consultant for the USAID World Council of Credit for Agriculture Producers, or CAP project in Ukraine, who has a presentation for us on how the CAP project is providing both expertise and financing to help Ukrainian credit unions integrate green solutions that benefit their own operations as well as their members. If you have any questions that come into your mind as you listen to today's webinar, please feel free to use the Q&A button at the bottom of your screen and type them in there. We'll be asking questions of today's panelists as time allows later. Also, this presentation is being recorded and will be available later today on the World Council YouTube channel. So to kick things off, I'm really happy to welcome back Kamir Mahadis. He first joined us for a webinar back in late 2020 to discuss his research then on the impacts of the COVID-19 pandemic on GDP growth. As an economist at Cambridge University's Judge Business School, he's here today to discuss his new research on how climate change is impacting sovereign credit worthiness. Kamir, welcome back. Thank you so much for being here.
Thank you very much, Greg. It's an absolute pleasure to come back and very much looking forward to the conversation with colleagues. I thought of telling you a little bit about the work I'm doing with colleagues across many different institutions and tell you a little bit about the risks associated with climate change, but also losses. But before I get to sovereign risks, I thought of rewinding a bit and tell you a little bit about the macro risks and how we map that into understanding sovereign risks. So you have to bear with me. I hope I'm sharing all right. So one of the biggest threats facing the global economy, in my view, is climate change. And it's not something new. It's not that we suddenly realized that climate is an important element in economic activity, into standards of living, into welfare, well-being, etc. And I've got a quote here for you from Voltaire, which says, "Three things exercise a constant influence over the minds of men: climate, government, and religion." And I'm hoping I'm going to be talking about the first two, so climate and government. And there are three things that I hope to illustrate by the end of my allocated slot of 15 minutes. Is one, climate change is not just an issue for poor developing countries or countries that are in hot regions. But it's also an extremely costly issue at the aggregate level, at the micro level for advanced economies and countries in colder regions. Two, the impacts of climate change will not be felt by the end of the century. The macro impacts of climate change will be felt within this decade. And there, I would like you to illustrate with some data that we have for sovereign ratings. And the third point I suppose I like to make is that we often associate climate change with losses in terms of agricultural productivity. And what I would like to do is to then zoom into the United States economy, arguably the most advanced economy in the world, and illustrate how climate change actually impacts pretty much every single sector of the US economy. So just to set the scene, we do know that global temperatures have increased significantly over the last half century, and we've been exposed to heat waves, droughts, flooding, natural disasters. And these changes, in particular in the distribution of weather patterns, is not, as I said, something that's just been experienced in developing and poor economies, countries in the world, and in hot countries in the world, but also in advanced economies. So if you remember, I was in LA in September 2017, which LA experienced, Los Angeles experienced the largest fires in its history. But at the same time, we also had another event happening close to California. It was Hurricanes Harvey and Irma, which caused major destructions in Texas and Florida. So this is not something that's only impacting poor developing countries, but also one of the most advanced economies in the world. In fact, NOAA has started calling these really big events, the really big extreme weather events, billion-dollar disasters. And these billion-dollar disasters have been, the number of them have been increasing over time. And the costliest one was, in fact, the year 2017, the year of Harvey, Irma, and the biggest fires in LA, with damages of approximately 366 billion. I show you a little graph here from NOAA, and also I want to sort of emphasize that $366 billion costs in 2017 is roughly equivalent to the Inflation Reduction Act that was passed in the US last year. So the amount that we're spending of climate change, we tend to think, addressing issues related to climate change, we tend to think are very big numbers, but actually the losses that have occurred in a single year is equivalent to what will be spent over the next 10 years. So these things are increasing. The other thing we know is that it's not just something that's happened in the past. We know, from climate science that temperatures across the globe, if we don't do anything, will go up to 6 degrees Celsius from pre-industrial times, and could go up anywhere between 1 to 2 degrees Celsius in the next century, so by year 2100. And what is worrying about that is perhaps not the rate of the increase in the temperature, but the rate of increase in the temperature. The warming is happening super fast. It's happening 20 times faster will happen 20 times faster over this century. So this rate of change is extremely unusual. So that's something we have to bear in mind when obviously thinking about these issues. Okay, so that's what's happening. So what do economists think? So one of the things that I started working in this area about 8 years ago, I was very puzzled, quite surprised that most economists would argue, and most studies would suggest, in fact, that the impact is felt mainly in poor and hot countries. And in fact, countries that are rich or temperate countries, and which happen to be where advanced economies are generally located, increases in temperatures would have very small impacts on economic activity. So the biggest hits would happen in hot, poor countries, and small effects, if any, in rich and cold countries. In fact, one study in 2015, just before the Paris Agreement was signed, this is from Nature, suggested that if you see the blue shades here, these are actually increases in temperature, increases in economic activity due to climate change. Purely due to climate change. There's no migration going on. There's no spillover effects going on. So these red areas basically are countries which will suffer economically from climate change. And the blue areas like Canada, Sweden, Norway, Russia, etc., most of Europe will actually benefit from climate change over the next until year 2100, which seems really puzzling because we do observe that in Canada, the impacts of climate change are negative. If you look at the for instance, this warmer springs and summers, major flooding in Canada, and obviously thinking about it more extreme, if temperatures increase a lot, flooding in cities and infrastructure, etc., will be impacted. This was very puzzling to us. So we did an exercise where we looked at we gathered data for over the last 55 years for 174 countries. And this is some news coverage about it, where we basically illustrated that the economic impacts of climate change are not just felt in poor and developing countries, but in fact, rich and advanced economies will be hit by climate change, but perhaps even as much as those poor and hot countries. So that's the basic bottom line. I show you some of the results of what we do. So what we noticed was that any deviations of temperature, this is what this red box is capturing, any deviations of temperature from the historical norm, what we've been observing over the last 30 years, what it does is that any deviation, whether it's colder or whether it's warmer, will actually negatively impact economic activity. So the question then is, okay, so you're looking at 174 countries. Could it be the case that this is mainly driven by poor countries or hot countries? So another exercise that we do is to say, okay, what if we isolate the impacts for being poor and from being hot? And what you notice in the red boxes is that there are no stars here, which means that there is no statistically significant difference between cold and hot economies in this case, and poor and rich countries in this case. So the economic effects of climate change are felt by both rich and poor and hot and cold countries alike. So that's one of the big things, one of the big messages that I want to put out there. It is not just a story for poor and hot countries. And the other thing that is important to notice, we're going to perhaps talk a little bit about adaptation, is that if you look over time, so you might turn around and tell me, well, you're looking at data 55 years ago, and that data, you know, lots of things have happened on the planet. People have got air conditioning, people have been adapting. So maybe the economic losses have actually reduced over time. And this exercise, the blue line, if you look here, is looking at that. It's saying, okay, what if we don't look at the data from the 60s, we start dropping data and we start moving towards the 80s? What would happen then? So since the 80s, what's been happening? And what you notice is that this blue line stays fairly steady. If we have adapted, then adaptation had basically offset the negative effects of climate change. The blue line would be going up towards the zero axis. So basically, what we notice is that adaptation itself has not led to these losses being offset. And just to show you a graph, these blue dots are cold countries, the red dot are the hotter countries. And what you notice here is that the increases in temperatures leads to GDP losses on the y-axis, increases in temperatures on the x-axis. In both cases, they will be leading to increase in the losses. In the case of Canada, in fact, quite large losses as compared to Brazil or Indonesia or Saudi Arabia. So the losses are felt across countries. And this is a map equivalent from our study showing that everywhere basically gets hit by climate change, and advanced economies potentially even more than poor and developing countries. But if we do stick to the Paris Agreement, the argument here is then that those negative losses would be very, very small, and losses globally would be, you know, 1% of global GDP, which is pretty much almost nothing. So sticking to the Paris Agreement is a good thing economically. All right. The last thing I do before I go into sovereign rating is to say what we have assumed is that temperature volatility doesn't increase over time. These projections that we are doing to year 2100 assumes that temperature volatility stays the same as we've been seeing over the last half century. But as climate scientists tell us that as temperature starts going up, the volatility of temperature is going to increase as well. And what this table illustrates is that if temperature volatility increases, the losses to economic activity double or more than double at each point. So higher volatility means higher losses. The second thing quickly I wanted to do is to say, okay, now that we have this data which links climate science to economic activity at the aggregate level, can we then start trying to predict sovereign ratings? And the answer is basically, can we bridge the gap between climate science and the sovereign credit ratings that we observe? And what we do is we use AI, and what we essentially do is we train the data that we train the ratings on the historical data that we have. We then adjust it with the losses that I've just been talking about, and then we try to predict. We train the model again, and we get some climate smart sovereign ratings. But at each stage, we stay close to the natural sciences, the economic principles, and the real life ratings, what S&P actually does. And what we see here is that this is different years, But what I want you to take away from this is a scenario which is basically no mitigation scenario. This is a Paris Agreement scenario. And what you notice with these lines is that as the decades go by, the predicted losses, the downgrades become larger and larger and larger. And this is obviously looking at over the next so just under 80 years. What happens if we look at within this decade? You notice that even within this decade, you see downgrades. You see, in fact, 59 sovereigns being downgraded within this decade with an average downgrade of one notch. So the impacts of climate change does happen on the GDP level. That translates into losses in terms of increases in risk, which leads to losses in terms of ratings, downgrades in terms of ratings. Okay, the last thing, 1 minute, I want to do. This is what you can see, and we do. I can very happy to provide links to our papers in the chat box if you want to follow up. These are in the paper, but this shows you what happens across the country. You see big downgrades in China, Mexico, US, etc. Okay, the last thing I want to do very briefly is to zoom into the United States. And we look at the United States because US obviously most advanced, well, arguably most advanced economy in the world, and would have, adapted to some extent. So the question really is, does it actually hold if you look at state level data in the US and go back and look at the last just over half century worth of data? So this is data at the state level. And what we observe is that you see negative numbers and lots of stars, which basically means that climate change, whether temperatures go up, whether temperatures go down, whether precipitation increases or precipitation drops, this has basically a negative impact on a real gross state product, real gross state product per capita, and productivity and employment across US states. And again, have we adapted? Well, if you look at over time, actually, no. It's pretty much this blue solid line has stayed the same or gone down. So the impacts are becoming larger across time. That's one of the important things that we show. And that also holds for precipitation. So this was temperature, increases in temperature, colder than usual days, increases in precipitation, and less precipitation. They all have had similar effects across the last half century. All right. And the final thing is, okay, what are the impacts across sectors? And then here, what we basically do is we show that this is not an agricultural, forestry, fisheries story. Climate change will impact mining, it will impact construction, it will impact manufacturing, wholesale, retail, etc., and services in particular. So it impacts every single sector of the US economy. Well, these are the climate variables: higher temperature, lower temperature than usual, higher precipitation, lower precipitation than usual. Everywhere you see stars, and pretty much everywhere you see is negatively impacted. So the climate change leads to negative losses in terms of economic activity. It does it so at the aggregate level, but also at the sectoral level. And these losses translates into essentially downgrades if we start taking into account the climate losses into our sovereign ratings framework. I think my time is up, so I'll stop there.
Kamir, thank you. And we'll get to more questions later, but I did just want to ask you one, because, we have a lot of people on this call who would say, well, downgrading of the sovereign rating as a credit union professional, as someone who's in the financial services market, and you have it right here on this sheet, as far as the US is concerned, it looks like definitely a big impact, negative impact on the financial industry. Why does the sovereign credit rating dropping as a result of this? Why is that bad for financial services?
Yeah, so I mean, I think the issue here is that we see, in fact, I didn't cover it here. Not only do we see the impacts on sovereigns, we also see the impacts on corporates, and I think that's where you will get hit. And obviously, on the other side of the equation are also households who have mortgages, and what you start noticing is that they will get hit. So, in fact, we haven't really modeled those spillover effects from households, corporates, sovereigns, and all together in a way. But what that would do is that it would make these losses even larger and these downgrades even more severe, I suppose. So, yeah.
All right. Well, thank you so much. Hopefully others will have more questions for you later. We are going to move on. We are going to move on right now, though, to Africa, because few places are experiencing the real-time effects of climate change in a more dire and rapid way than sub-Saharan Africa. That's where our next speaker is joining us from. Grace Akinyi serves as head of programs and business development for the African Confederation of Cooperative Savings and Credit Unions, or ACOSCA. They are a direct member of World Council of Credit Unions based in Kenya that represents about 20 national credit union associations across the continent. Grace, thanks for being here. Tell us first, what is Africa specifically facing with climate change as ACOSCA looks at it?
Thank you so much, Greg, and thanks for having me. So in Africa today, as the previous speaker has alluded to, climate change is a real issue. And it's more so because already the populace are going through a lot of issues, including high inflation, including issues to do with very high prices, high commodity prices, crops that are failing because of generally the very quick eruptive climate change that has happened over the last few years. So as it is, climate change is a real concern. And I would say it has even brought the attention of many African leaders, as was alluded with the meeting that was held in Nairobi recently, that had the climate summit that brought all the African leaders together just to discuss some of these pertinent issues that are impeding our growth.
ACOSCA has an action plan, I know, that looks at how members are going to be affected, what they can do. What does that action plan entail?
So if I could take you slightly back, that this action plan, I would say, as you compare with the other developed worlds, the action plan that ACOSCA developed just came in recently in the month of March. And that was as a result of a collaboration between ACOSCA and Desjardins, where we start to say, how do we map up and how do we draw a plan to support our communities through the credit unions? The action plan then was preceded by a 5-month study, speaking through credit unions across the continent. And these were some of the findings that came through, that indeed the knowledge of climate action is quite small amongst our credit unions. And today the action plan is up and active, and it's enthroned in 3 axes. One that speaks to governance, enhanced governance, which is critical. And then green knowledge. How do our members understand that climate action is a real problem? And finally, climate finance, where we are saying, how do we then empower credit unions to help the community support and mitigate climate action?
You mentioned governance. That's interesting to me because a lot of people would say, why is governance important when it comes to having a climate action plan? So can you speak a little bit further about that?
So governance in the sense that I will tell you, Greg, many of our board of directors today, many of our CEOs do not actually understand the impacts of climate action. That's just the way it is on ground. And even if they do, they have not internalized the effects, as Kamia was explaining, the effects of climate action across the economic divide. And so that's where it starts from. We feel that leadership from the front, at the front, will then catalyze this change that we want to see amongst our communities. And even in decision making, the kind of decisions that are made in terms of allocation of resources will be aligned if the leadership understands the importance of governance. As we were walking across the continent, we realized that climate action as a strategic pillar, actually, it was non-existent. It was very I would say minimal, and just very few circles were embracing it. So that was our starting point as ACOSCA, to say, how do we bring the leaders up to speed so that this is an agenda that is alive across all borders.
And you mentioned across borders, you've got 20 national credit union associations. Africa is very diverse. All of these countries have different needs, have different perspectives. So how do you manage that when you've got that big? I mean, I know that we have a lot of members too. So we face something similar, but how do you do that with ACOSCA?
Okay. Yes. So ours is to contextualize per country. We are very cognizant of the fact that each and every country has its own culture, has its own tradition, has its own way of doing things. And that's why COSCA is a continental platform that we bring all these countries together to say, we are championing a way forward, but it's a way forward that is contextualized to what makes sense to you. Through the national associations with whom we have very strong ties, very strong relationships, we create platforms. And one of these key platforms is the SACA Congress that is happening in a few days here in Gaborone. Part of what we are going to do is actually to launch the action plan. And it will be a rallying call to all the leaders across. I believe it's a document that will be embraced because there was stakeholder engagement prior. We did a consultative meeting with all these countries, bringing them together and coming up with running themes that then speaks to their specific needs. And by so doing, just like we've had rallying calls on various pertinent issues affecting the continent, we believe we'll be walking the same path.
You mentioned that in a lot of the credit union boards of directors and leadership, there's not a lot of knowledge on climate change. How much knowledge is there in your mind? And I guess if maybe you have a better perspective on certain countries than others, in terms of the actual SACO members themselves, how much knowledge is there where they're concerned?
So I will tell you that the lack of knowledge amongst the leadership is a true reflection of what the communities of the members of the SACOs really represent. And so I would say, I would give an example actually of community where through a partnership of a credit union and a donor partner came in and installed solar panels to support the community, because the heat was then being harnessed for the benefit of the communities. Then a political leader comes to say, oh, this is not good for you, they're taking away your land. And they rallied these members to destroy the solar panels. That's an indication of a real concern that there's no knowledge, but more importantly, the knowledge is missing from the leadership level because communities believe in what the leaders say. And so we are very aware that that's where we start from. How do we enhance this governance structure to understand it? And then compound that with knowledge and understanding, both from the leadership level, but also at the community level.
Yeah, I was going to say, I mean, SACOs are so tuned in, like credit unions everywhere, to the communities that they serve. I would think that even though the membership may not be as large as banks, that's especially in some communities, the SACO leading on this issue could be huge for the community itself to become more aware and more adaptive, right?
Absolutely, absolutely, because SACOs are very well connected to the communities. They are closer to the communities as opposed to other financial institutions. We all know the philosophy that brings them together is their common goals. And so they have a very powerful tool as members of a credit union to advance this agenda. And so we are fully supportive of this vehicle. And that's the conversation we are having even with policymakers, with government leaders to say, this is a war that can be won easily through SACOs or through credit unions.
And I assume that there are products and services that are part of that, right? That you want to see implemented, whether is it green loans, is it resilience for the credit unions, the SACOs themselves. What are some of those services and products that COSCA is recommending be implemented?
Oh, yes. In our study as well, we found out that there are some SACOs that are well established, particularly the larger ones, who have started embracing climate finance. And they have innovative products that they're putting across to support members, particularly things like crop insurance. Africa is largely an agricultural community. And so the danger of you losing crop is detrimental to the whole community, because crop is what puts food on the table, but more importantly, it's also a source of income for all the other needs that our community would have. So it's a critical component of it. But then there are loans also that are supporting entrepreneurship towards that area. If you may know, motorcycles are very popular in many of these African cities, and they're driving the small and medium enterprises economy. Today, the circles or credit unions who have innovated to the level that they are offering specific loans to support motorcycles that are electric in nature and vehicles as well. So we are seeing increasingly a way of life that many of the credit unions now are championing to ensure that the communities understand the effects of climate action and the effects of non-action as well.
It's really fascinating, and you being on the front lines there of climate change makes it all that more relevant for you. I really appreciate you taking the time, Grace, to explain all of this, and we'll certainly probably have some questions for you. We'll come back to you later in the hour here. I want to get to our final presenter of the day first. That's Alyssa Stetsishin. She is the communications lead consultant for the USAID Credit for Agriculture Producers Project, or CAP project as we call it, which World Council has implemented since 2016 in Ukraine. Those of you who follow our work closely may have seen Alyssa speak on one of our webinars before, or at the World Credit Union Conference before, either on behalf of WOCCU or the Worldwide Foundation for Credit Unions, especially since Russia launched its full-scale invasion of Ukraine 19 months ago. Despite the war, partner credit unions of the CAP project that work with us in Ukraine still have a strong desire to implement solutions that will make them more climate resilient, and Alyssa is here to talk more about that today. Alyssa, there's a lot of ESG work that the CAP project is doing. Why don't you give us a little rundown of that?
Thank you, Greg, and thank you for inviting the CAP project to this event. So good morning and good afternoon, everyone. I've been serving for over 6 years as the communications lead with the USAID-funded CAP project, which has been implemented in Ukraine by the World Council. And as promised, just a brief summary about the project itself, for you to understand what we've been doing in Ukraine since 2016. So the goal of our project is to improve access to finance for agricultural, micro, small, and medium-sized enterprises through credit unions, through strengthened credit unions, as credit unions are often the only source of finance for small farmers in Ukraine, given that they're not the target audience for banks' commercial loans. So as a project, we focus on modernizing the legal and regulatory framework of credit union operations in Ukraine, support them with digitalization of their services. We provide technical assistance to upgrade the credit union, agricultural, and business lending capacities, and for them to use the best global practices in this area, as well as we ensure liquidity support for the institutions to apply the acquired knowledge also on practice. As you know, Ukraine has been fighting against Russia's full-scale invasion for over 1 year and 7 months now. And as a project, we never stopped operating on the ground, and we continue to support our partner credit unions across the country, and of course, those seeking for their help. But the war brought also new challenges to Ukraine and Ukrainians, and including a major issue connected to environment and pollution. The recent survey conducted by Resource and Analysis Center, Society and Environment in Ukraine, shows us that green reconstruction and sustainable development have become crucial concepts for the Ukrainian society amid Russia's ongoing war. And of course, it's connected to the fact that we have massive mining and overall soil, air, and water pollution resulting from active combat in the country. And over 95% of Ukrainians today consider environmental protection an important issue. And if we talk about the reconstruction, 25% of the respondents say they expect green reconstruction to be embedded in the post-war recovery plan, including energy efficiency, renewable energy, environmentally friendly vehicles. And I should also mention that promoting sustainable finance is also one of the priorities of the National Bank of Ukraine, which is the country's credit union regulator. as it is stated in its sustainable finance development policy for 2025. And it includes 4 key pillars, which you can see on the screen. The most important to start with are the first ones, the implementation of environmental, social, and governance, so ESG, as we know this abbreviation, factors, as well as environmental and social risk management. And based on those 2, the next 2 can be implemented too. But of course, because of the war, the implementation of this roadmap is postponed, but the regulator encourages the financial market players, including credit unions, of course, to make steps in this direction. So as a project, we decided to start to help our partners on this way with developing, first of all, a manual and provide training on applying environmental and social risk management in their work with agricultural borrowers or farmers. So as part of access to additional liquidity for agricultural lending under the $1 million liquidity fund, which was launched by USAID and the Worldwide Foundation for Credit Unions, our partner credit unions in Ukraine now perform environmental screening and analyze and mitigate environmental and social risks connected to farming. For that, they have the special templates that were developed and translated, and they are adjusted to the Ukrainian realities. And one more initiative that was launched already this year, 2023, by the CAP project in cooperation with Worldwide Foundation for Credit Unions, which is called Resilience Initiative. So $500,000 were allocated by the Worldwide Foundation from the Ukrainian Credit Union Displacement Fund, which was launched in February 2022, just after the full-scale war started. And now we leverage the donations that we received from the global credit union community to support credit unions in Ukraine in a different way. So the goal of the Resilience Initiative, one of our programs launched, is to assist vulnerable populations with access to finance and mostly to develop their small businesses in the rural area, as well as to boost sustainable development in Ukraine amid war. And as sustainable finance is a new area for Ukrainian credit unions, thanks to this particular initiative and, of course, the technical assistance that the CAP project provides to the partner credit unions, they can learn in theory and on practice how to lend for sustainable development. And most of their products that they right now already offer, as the initiative is already launched and the lending process started, it's focused on either environmental issues, so the loans to help with renewable energy or nature-based solutions, or energy efficiency, which is, of course, very important in Ukraine after last winter, because as probably you know, we had massive shelling of power critical infrastructure and a lot of people suffered from power outages. So energy efficiency and alternative energy sources, especially renewable energy, is very important, and people realized that we have to streamline these activities. The second area of sustainable development finance would be innovations. So any kind of innovative technologies that can be implemented by different types of businesses, as well as, of course, inclusion. I mean, it's probably clear that we will have to focus on inclusion a lot, given the further consequences that the war will bring us in terms of our society and how it will look like. So inclusive solutions are extremely important, and that's going to be the third area under sustainable finance that Ukrainian credit unions are starting to provide loans to, as well as, of course, educational services. We understand that the future generations is key for the society development, and the cultural heritage protection is, again, very important, given that a lot of our monuments were already destroyed and others should be protected. And so any initiatives that are aimed at these three areas can be financed by our partner credit unions in terms of this resilience initiative. Just to sum up, I would say that our end goal is, of course, to help Ukraine withstand and rebuild after the country wins this existential war, and to rebuild applying best environmental practices where credit unions can really play an important role if they are well prepared, which we're trying to do, given their unique closeness to local communities. If ever you have other ideas to help us on this way, please contact us or follow us on Facebook or AgriLinks. Thank you.
Alyssa, thank you. You know, we talk about this a lot at WOCCU, but about what's going on in Ukraine, about the work we're doing. And I gotta believe, as a Ukrainian citizen, it's hard to find silver linings with everything that's gone on since February of 2022. This seems like one. Is it surprising to you that there is this push now for people saying we want what we want rebuilt is with renewable energy in mind?
Well, that's a great question. Thank you. It's we're trying to always see some light, even though we have bad moments, of course, during all this time. I really was kind of glad when I saw the survey results, because honestly, climate change and environmental practices, they were not the top priority among Ukrainians for many years. But now that we see the effect of all that's happening in the country, and we kind of feel already the whole Ukrainian society, we feel the bad impact, the quality of water, the quality of soil. You know, we have one of the most fertile soils in Ukraine, and after the Kakhovka Dam destruction, for example, or while a lot of our fields are mined, we already understand we have to cherish what we have. And I'm very glad that the Ukrainian society understand it. And just to, you know, echo what Grace said, the more society and communities realize the importance of that, the more governmental and other organizational solutions we can have to make it more environmentally friendly. Everything we do, how we do business, how we do agriculture, how we just simply live, and the way we care about what's around us. So yeah, I'm staying positive. We all are, and I hope that we can actually move to green reconstruction very soon.
Absolutely, we all do hope that. We do have a couple questions from our audience that I want to get to. We have about 15 minutes. Jenny Lynn asks, and maybe this is a good question for you, Grace. She asks, governments are sometimes slow to educate their citizens. How can credit unions in developing countries ensure surviving these challenges and minimizing any negative impacts on climate change?
Okay, yeah, thanks, Greg, and thanks for that question. Actually, from where we sit, we see credit unions as great vehicles for education, and we are actually guided by the principle of education as part of our core values. And so credit unions have taken upon themselves to be part of the solution. And sometimes, yes, we use the government as a complementary vehicle, but we see credit unions also playing a role. And so we are saying it starts with us. It starts with us within the credit unions to spread the word and educate our communities to the level that we can. The government is there together with other key partners to support us in that process.
Kamiyar, I do want to ask you, because we have some time here, and I know you said that you kind of, I think you were a little afraid you would go over time, skipped over it a bit, but I want to talk to you more about the corporate issue that you mentioned earlier, and the fact that corporations are going to see this hit. If you want to go into that a little bit deeper.
Yeah, I mean, I think they're definitely. Well, we are just starting to look at linking not just climate change but biodiversity loss with colleagues on the losses associated with those on ratings and other financial indicators. And so preliminary, you see that, yeah, I mean, there is in some of the studies that we did, and one of the studies that we look at sovereign ratings, we in fact did a little bit sort of back of the envelope for corporates. We do see impacts there. So absolutely, I think I also want to be absolutely clear. What I presented was very conservative estimates. So that's like the best case scenario. Really, it could be a lot worse. Yeah. And I suppose the other thing that I wanted to mention was here, and it goes with some of the questions here about education and government, etc. I think government regulation and incentives matter hugely here. So it's you know, we know that, for instance, the Inflation Reduction Act that I mentioned, it is in the order of $370 billion, but actually it crowds in private sector investment of approximately $1 trillion. So the government incentives and regulations are really, really key in addressing. And the IRA is all about carrots and not much about sticks. And we do need to think about taxation and etc. Which will then also have an impact on situation financially of the governments and trickle down to the sovereign ratings.
We have one more question for you, Grace, from Sammy asking, what are other product and services in addition to crop insurance, loans to support entrepreneurs, and loan for electric motorcycles that are being offered in Africa? Are there other things that you foresee being offered?
Yeah, thanks for that question. Yeah, so we are in the development stage now, and I know there are serious talks around particularly housing, affordable housing, and there are now partnerships because housing in itself is a huge investment, and therefore we are increasingly seeing a lot of partnerships where governments are coming in, private investors are coming in to push communities to green housing. But the most crucial product I would say now is the knowledge, the green knowledge, and credit unions have taken that critical role to try and educate their members through the national associations, through ourselves, because we believe that's where it starts from.
We have a question from Barry, and I don't know who wants to handle this. This is a big one. But you know, climate change is one issue, and there are the UN has outlined 17 sustainable development goals. Cooperators around the world, they're dealing with a lot. They have fewer resources. I don't know if Grace, your organization has looked at it. I don't mean to keep pointing at you, but since you are part of an apex organization for credit unions and SACCOs in Africa, are you looking at all 17 of those development goals with the UN?
Well, Greg, I would say yes. Well, not easy, but yes. We find ourselves somehow tackling all those issues somehow, because these are the natural member problems that would bring them into our credit union. If you're looking at housing, if you're looking at water, if you're looking at a clear planet, unemployment, those are real issues that are affecting our members on a day-to-day in complex manners. But I would say at the end of the day, there's always a member who is walking into our credit unions with such a problem. What I would say is I think we need to stretch out more for collaboration and partnerships. I believe, Greg, you started by saying that it's a global world now, and we are better placed to tackle some of these issues if you are working collaboratively.
Kamir, I saw you laughing a little bit when I asked that question. Do you think that in general business is tuned into those 17 SDGs from what your research is showing?
Yeah, I mean, I think the issue is we talk about climate change as if it's something that's happening in isolation, but actually addressing issues related to climate change will address a number of the 17 goals, you know, from gender equality, if we create those jobs, the green jobs, clean water and sanitation, if you think about decent work and economic growth, with green innovation, affordable and clean energy. So I think, yes, we should, Barry's absolutely, I can't remember who asked the question. I think it was
Barry. Yeah, it was Barry.
Barry asked the question. Yeah, as absolutely correct. We need to think about the bigger picture here. But climate change is impacting all of the 17 to some extent. So if we can start addressing that, and the solutions to climate change will also be solutions to some of those goals. So I couldn't agree more. And in fact, we shouldn't just talk about climate change. We should probably talk about, as I was referring to, biodiversity loss or nature in general. We should be thinking much more broader. But good policies, and that's not just governments, but also the private sector play a huge role in creating employment, in creating the renewable energy revolution that we've seen, creating sustainable cities, and et cetera. So yeah, I absolutely agree.
Yeah, and do you sense, because I hear this, Kamiar, that in Europe especially, and maybe Alyssa can speak to this too, that there's frustration with the United States. There's frustration with, now I understand you talked a lot about the Inflation Reduction Act, but that's really one of the few things that we've seen from the federal government in recent years that's really spurred any kind of mitigation in this area on, you know, on the private sector and elsewhere. Is there frustration there?
I mean, I think the initially when it was announced, you could see a lot of opposition to the IRA. I think a lot of people were thinking, oh well, it's creating, you know, trade barriers essentially. But I think on the other hand, you can think about it and say, well, Europe and the rest of the world has been saying US needs to do more on these issues, and so I can also see the American point of view, which says, well, now we are doing more, and it's now your turn to scale up to the same extent. So. I think IRA is actually, as I said, it will crowd in, and the estimates from various major consulting firms show that it's going to scale in order of $1 trillion. So I think investments in order of $1 trillion. So I think the IRA is actually a good thing, and we do need to think in Europe how to, and elsewhere in the world actually, how to start matching that, which is more tricky if we have a sort of constrained fiscal space coming out of COVID.
And Alyssa, I don't want to put you on the spot. If you have nothing to add, that's fine too. But I just didn't know if you've heard those similar things in being in Europe.
I wouldn't say we have a lot of discussions on how ones do worse than others or ones do better than others. I think just to mention that, yeah, well, maybe there are some things where the EU is more advanced in terms of environmental protection. I would say it's more focused. It's been longer here, and as I live in Vienna right now, on the household level, so people are more used to recycling and things like that. But and that makes a big contribution actually. So what I would just add is it's good to be cooperative, but start small. So think big and start small. So if everyone at home would take care of that, saying and think about what we buy and what packaging it has, starting from even this, and moving to financial institutions that apply the strategy of helping their members, the businesses that ask for finance in credit unions, for example, so that they help them with the ideas of how to make their businesses or operations or anything they're engaged in more environmentally friendly, it will all add up. So I mean, asking for governments to do more is a great thing, but we can also, and I'm from a country where we rely a lot on ourselves, not only on government, because that's the conditions we unfortunately have been in for more than one and a half year. So if everyone is engaged, I would say there is nothing we cannot achieve.
Thank
Can I
you.
add to that we
yeah.
often talk about, and the way I was talking about it as well, is we talk about it from a middle income or high income country. We also have to remember there is 800 million people living below $2 a day, and for them to make those changes, they just don't have the capacity. And so one of the things that we should be talking about, it's not the topic of today, but transfers of both capital and also technology from the US, from the Eurozone, from other advanced economies to developing countries, to get them to achieve both better environmental outcome, but also the 17 goals. So yeah, I think that's a separate conversation, but that's where really finance will matter, in my view, and the role of the banks will become very clear.
All right, Kamier, thank you again, as always. Everyone, really, Kamier, Grace, Alyssa, all of you, for your time and really, really interesting perspectives and great things that, some scary stuff about what might be coming down the road, but some great things that credit unions and cooperators are doing to make sure that we're perhaps getting more prepared for this existential threat, which it is. If you like this event and you want others to see it, you can refer them to the World Council YouTube channel. That is at youtube.com/WOCCU, youtube.com/WOCCU. This webinar will be available there later today. And just an FYI, we invite you to also learn more about World Council's new Climate Influencers Network, launched at this year's World Credit Union Conference in Vancouver. The network is leveraging the power of cooperation to accelerate opportunities in climate finance and replicate solutions across our global credit union movement. You can learn more about the Climate Influencers Network by visiting woccu.org/climate. That is woccu.org/climate. Thanks for joining us, everybody. Have a great day.